Hi everyone, welcome to the channel. In this video, we're going to focus on the company eBay, ticker EBAY, the online marketplace for buying, selling, and auctioning items. We'll take 2 to 3 minutes to look at their financials first, then get into the valuation. And I did own this stock at one time, so we'll look at my purchases and sale, and lastly, my portfolio performance. Now, one quick look at their numbers here. I do see some concerns, although there are a few bright spots. And we're going to start off with revenue. Not only has there been several down years shown in red, but over the past 10 years, revenue is up only 15% from 8.8 billion in 2014 to just over 10 billion in 2023. So not a strong signal that this company is growing. Then for both net income and earnings per share, both of these had significant down years back in 2014. I see net income at 46 million and earnings per share at 4 cents. So I am going to remove these. Now, when we look at net income from 2015 to 2023, it's up only 60%. So, again, not a strong sign here either. And also for 2017 and 2022, these were years when eBay had negative net incomes. And for an established company like this is something I'd rather not see. However, for earnings per share from 2015 to 2023, this is up more than 265%. So, a positive sign here, which is helped by their share repurchases, which we'll get into in a moment. They just started paying a dividend back in 2019 and have increased it every year, and it's up 80%. So this is another bright spot. Next is shares, which I think is one of their best data points, decreasing every year for the last decade and down nearly 60%. So a very good sign here for the company. However, then we get into free cash flow, and back in 2014 it was over 5 billion, and 2015 more than 3.3 billion. But since then, free cash flow has been well under 3 billion and never exceeding 2.5 billion. And though they are making cash, but it's not growing, and there is a clear sign here that it's on a decline. And because of this, I'm going to remove 2014 and 2015 values so we don't skew their valuation higher. With those two free cash flow years removed, we'll move on to net profit margin. And yes, they had some very great years, well over 20%. Even 2021, we can see over 100%. So I'm presuming they sold something off that year to get it so high. But then we have the two negative years due to the negative net income. And back in 2014, we can see it's less than 1%. So inconsistency here. So something I'd rather not see. I'd rather see something fairly steady. But yes, they had some great years, over 20, high 20s, and even higher. But let's jump down now and we will perform the valuation. Here's the valuation setup for eBay, and we can see intrinsic value just under $73, and with an 80% margin of safety, brings it down to $58.28. Now, this is based on a 6% short term growth rate over the next 10 years with a 10% discount rate, and I am using a 3% long term growth rate. Now, up here in the top right, we see the net income CAGR over the last 9 years, just over 6%, and earnings per share CAGR at 17.6%. Now, if you remember, we removed those two values from net income and earnings per share back in 2014 because they were fairly low. And if I kept that in here, these values would be like 50% or higher, and eBay is not growing at 50%. So that's why I removed these, so I can get a better gauge at what their growth has been. And we can see my short-term growth rate, as I mentioned, I'm using 6%, so pretty much matching what their net income has been over these last 9 years. Now the stock is trading around, I think, around $52, give or take, and so it looks like there is some value opportunity here with a margin of safety. But I do think there's better other opportunities out there than eBay. And even if you want to say my valuation is a little bearish, that my 6% short-term growth rate is a little low considering EPS has grown over 17% over the 9 years. So let's just increase this growth rate from 6% to 8% just to see what we get as a valuation. With an 8% short-term growth rate, intrinsic value jumps up to $85.34, and with that 80% margin of safety, brings the value down to $68.27. Now, I am using that 80% margin of safety just because we saw a lot of inconsistencies with eBay looking at their financials, and several years that were had negative net income and free cash flow. We saw it was on a decline and has not exceeded those 2014, 2015 values. That's another reason why I'm taking a higher margin of safety into account because of that. So let's look at a few other data points before we move on. PE ratio, we see under 10. So yeah, it does show that some value opportunity there. I can see why that would entice somebody to invest in the company. But long-term debt to free cash flow, you see 3.5. I like seeing companies over 3, so a little bit on the higher side than I rather see. As we already discussed, dividends, they started paying dividends back in 2019 and up 80, almost 80%. So a great sign there. Dividend yield just over 2%, so probably about what an S&P 500 ETF will give you, maybe slightly under, but still in that same range. And then one of the best data points, shares down almost 60%. We see minus 57% over the last 10 years. And then net profit margin, as we saw, they were fairly high. Average over the last 10 years, 35%. And over the last 3 years, 48%. But remember, the last 3 years takes into account that 1 year where it was like over 100. So they probably sold something off. So you kind of have to discount that if you're really looking at that number. One other data point I like looking at is return on invested capital. I like seeing this over 10%. We see clearly over 10% for the time period shown. So that is a very good data point there. So yes, there are some positive data points, but again, there's several negative signs or concerning signs that we looked at. And for me, I would hold off buying into this company. I would want this to probably drop into the $40 range, really, if I was going to consider buying into it. And I would really look at using that 6% short-term growth rate, which we had originally. If I was going to consider buying into it, I think 8% is fairly aggressive growth rate, especially eBay has not shown any signs that they're going to be turning things around soon. But let's move on, and I'll show you my purchase into eBay I did a couple years ago and what my profit or loss was. So I purchased into eBay back in June of 2022 at a price of $42.50, and my intent was to buy into it over time. But I sold out a couple weeks later as my thesis changed, and I felt there was better opportunities elsewhere. Just as I mentioned now, I think there's better opportunities now than there is to buy into eBay. For example, Toll Brothers, ticker TOL, they're a home builder. I'd buy into them now before I'd buy into eBay. And it is Toll Brothers is a stock that I own, and we're going to see it when we look at my portfolio overall. But as I mentioned, I owned it for a couple of weeks. It did go up 7.4%. So not too bad for a couple of weeks, and it was in a tax advantage account, so I didn't have to pay any taxes. Now, during that same 2 weeks or so, the S&P 500 went up. You can see 4.74%. So it did pay off. However, the stock is currently trading, as I mentioned, somewhere around $52. So what's that up? About 20%, maybe 25%. While the S&P since that time is up like 35, 40%. So if I held on to this stock since that June 2022 time period, I would actually be underperforming the S&P 500. So I am kind of glad I sold out, and I'm glad my thoughts on the stock changed back then. And you can see down below, it was a small investment at the time, just over $1,000. And as I mentioned, my intent was to buy into it over time, but I changed my mind and moved on. But let's take a quick look at my portfolio performance next. So here's my portfolio performance overall. And as I indicated, I no longer own eBay. And a stock I would buy into now before buying into eBay is Toll Brothers, ticker TOL. See on the far right there. I've owned Toll Brothers for several years. I think I bought into it back in March of 2022. And those initial buy-ins are the ones that are up that 155%. So clearly outperforming eBay since that 2022 time period. And I actually just bought into Toll Brothers recently again. And another home builder you may want to look at too is Pulte Group, PHM. And we can see that's up from those initial purchases, probably in that same 2022 time period, 143%. And I'm still bullish on home builders probably for the next couple of years as we underbuilt for about the last 10 years. And we can see another one I'm just going to point out, SWBI, Smith & Wesson. I've owned that for a couple of years now, and I'm going to do a video. Probably my next video is going to be on Smith & Wesson. The only other one I'll point out is AAP, Advanced Auto Parts. I bought into this probably back in October, and I did think the stock was undervalued, but we can see it's up 50%, even outperforming the S&P, which is, I think it's up 25, 30%. So Advanced Auto Parts beat my expectations, even though I thought it was clearly undervalued. I was not expecting that much growth in just a couple of months. But I hope you enjoyed this video and got some useful information. If so, consider subscribing. Hope to see you next time. Thanks for watching.